Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. Just want to put a disclaimer. I'm not a financial advisor. These are just my opinions and thoughts on the market. I can't guarantee performance. So, anyway, let's get into today's market action. Big day for gold. Gold is in blast off mode. And you can look at gold. I just wanted to get this in because so many times, if you follow my videos, it'll be after hours. Look at this, gold up past 2,400. Silver is getting ready to go to 50, in my opinion, not financial advice. Look at that. Big moves today. And the other thing, too, is the stock market. Let's go. We're sharing. I mean, the Dow Jones was only up 32 points. S&P down 49 points. NASDAQ down 364. Not saying gold's in a stock market's in a bear market or this is a top or anything, but what I think it is for the stock market is they've been pricing in rate cuts so many times, so many times, so many times that even with this data, they're not believing it. So I think the stock market, but meanwhile on gold, with the weak economic data and lower inflation and these rate cuts, I think you're seeing this type of move because they're just not sure. So they're going, when all things fail, they run to gold. So that's what I think they're seeing. And that's what I think the market is seeing. Looking at the data today, we always go inflation rate 1%. That's less than expected. Month over month, went down. Inflation's down, which doesn't mean anything. They could be technically right too. Uh, could just mean inflation's doesn't mean prices are down. Just means they're rising at a slower rate. But core inflation year over year 3.3. Consensus was 3.4. So whatever that means. So and if you looked on this channel, and the day oils came out, they released a Verge. I warned you about this, so this should not be a surprise to you if you've listened to this channel. If it is a surprise to you, subscribe to this channel because you haven't been listening to this channel, or maybe listen a little bit. I don't know, listen better. So anyway, that's it, and I think what's going to happen is you're going to start seeing weak economic data too. And you look at it, it looks like I'm going to go into a couple articles. I had all these articles on my emails, thought about talking about. I wanted to keep this short and sweet, but let's go back. It's a gold, couple of videos. I said gold's getting ready for blast off, and look at the day we have. So gold, as I said, my target's 27,000 to 2,700 to 3,000, not 27,000, not that type of podcast, but 2,700 to 3,000 is probably where it's gonna end, and then this run will probably be over. Anyway, let's go look at the real. So these are some things that caught my eye. This is CNN, trusted source of news. Anyway, the U.S. economy faces a new threat. Yeah, new threat. It's been facing a threat for a long time. But let's see what CNN. Oh, look, the biggest danger facing the American economy is inflation. Yeah, well, it's no. Now this was a couple of days ago, not after. And then now another problem is emerging: unemployment. And this shows that this was after. Let's see. Uh, this was July 10th. Today's the 11th. So this was written yesterday. This shows that the jobs numbers is not looking good. So just as inflation continues to cool, yellow lights are flashing in the still strong job markets. Federal Reserve must now confront the risk that it's making a mistake by keeping interest rates too high for too long. So here they are, they're through their mercenaries, the elites mercenaries, also known as the media, CNN. They're telling them cut rates or else. That's why some economists are pleading with the Fed to ease up on the inflation fight, on its inflation fight before high interest rates, which it's used to tame surging prices, grind the U.S. economy into a recession. I thought those recession deniers were, that's what they called them, or the recession conspiracy. I thought they were just crazy. I guess they're not now. It's time to cut rates, chief economist at RSM. Inflation is fading as a focus of concern. Yeah, well, that's because all the business owners are seeing how they're doing now. Balance of risk is tipping towards higher unemployment. Uh, the Fed keeps rates too high for too long. The biggest danger is a policy mistake. The Fed keeps rates too high for too long. Elevated inflation is not the only risk we face, Powell told lawmakers. So pointing to easing inflation and cooling in the labor market. So obviously Powell's getting the memo. They've told him what to do, and he is on board. So he's probably going to cut rates once or twice as a symbolic victory. And then the economy will probably crash, and then he'll go back down to zero. But we'll see. And of course, oh yeah, the job market's not imploding. Still healthy, faster than thought. Cracks have begun to emerge. Look at that. But it's noticeably crept higher, says KPMG. So as you can see, I'm not going to read the whole thing, just giving you the gist. Hiring is slowed in leisure and hospitality, a sector powered by consumer spending. So anyway, waiting too long. The current risk is that the Fed is injecting inflation-fighting medicine in an economy that no longer needs it, and it could turn to a cooling job market into one that's frozen. Well, what they don't realize is this is going to really induce inflation. The only way to kill it, as I went in my video last day, is to Volcker it, and that's cause a recession. So if they lower rates. So anyway, let's keep going on. Let's see if there's anything worth anything in this article. See, what I'm doing here is I'm translating the article, taking out all the crap so you don't have to read it. So a balanced labor market with restrictive rates from the Fed will not remain balanced for long. Means higher unemployment. So as you can see, inflation isn't gone, of course. The high cost of living remains a major concern. Yeah, it's one of the reasons. And unless prices come down, which requires a recession, then it will be just bad. It's either recession or big league recession. So some mainstream economists, yeah, they're stupid. No one cares about them. So anyway, learning if the Fed cuts rates prematurely, it could stimulate demand from consumers and businesses that could boost inflation and make matters worse. So yeah, they're probably just saying Powell, yeah, doesn't want to repeat the mistakes. In the 70s, rapid spiked rates then lowered before inflation was defeated. So more recently, Powell led, this is funny, was slow to the inflation fight, waiting too long to respond to price spikes because officials and many economists thought inflation was transitory. Yeah, so they think tariffs and all that is going to be bad. Then, but they were wrong about transitory inflation. So why are we listening to them now? I think you know why. And they don't. Yeah, so they have PTSD from what happened before. They made a mistake not raising fast enough. Now they run the risk of keeping rates too high for too long. And that's basically what they're saying. They're telling them to cut rates, and this is why this article shows why they're going to cut rates this year. They might do one or two. So anyway, let's keep going. And then what they're going to say is the Fed didn't cut fast enough. This is the interesting thing. This is the beginning of the housing market. Right here, Florida is bucking the national housing trend, real estate firm says. Austin, oh gosh, who cares? Yeah, let's get that to 0. Get rid of all this, yeah. Austin, so Florida's bucking the national housing trend. Real estate firm says Austin, Texas also saw rents fall significantly. So anyway, while the majority of the country is seeing rent prices increase, see, until the rent prices go down, consumers not coming back. Florida's rental market is getting more affordable. So there you go, Florida's rent. According to Wednesday's report from a real estate firm, Redfin, the median apartment asking rent rose 7%. The biggest gain over year. It was also the highest median. So anyway, comparatively, the 4 most populous metro areas in Florida are seeing rent prices decline. So here it is, and that's the thing. They say this is going to be a bifurcated or real estate's local. No, it's really not. It is local in a sense of Best Buy. It's just like stocks, stock picking. It's individual stocks, but this is what you call before the crash comes bifurcation. Bifurcation is generally just a sign the crash is coming. Just like subprime was just contained, so Orlando and Miami prices fell 4.3%. Austin, Texas, another pandemic, also saw rents fall, dropping to 12.6. Record 12.6%. So yeah, the most speculative areas are the first ones to fall, and then the rest of the country is going to fall with it. So influx of apartments were built in Florida and Texas. They overheated during the pandemic. Everything overheated. Houses in general. It's just the most speculative are coming down first, and then the least speculative will come down with it. So anyway, so yeah, that's what it is. And yeah, so there you go. You see Florida and Texas, it's already coming down. And this is an interesting development, which I think is going to start happening all over the nation, all over the world regarding the US economic data. Here it is, reliability of US economic data is in jeopardy, study finds. This is very interesting. A report says new approaches to increased spending are needed to ensure that government statistics remain dependable and free of political influence. This isn't Zero Hedge. This isn't InfoWars. This is the New York Times. See where the mouse is? I'm doing the circle. The New York Times. New York Times. So Federal Reserve officials use government data to help determine when to raise and lower rates. Congress uses it. Yeah, that just basically says. So who uses it? A new study says the integrity of the data is increasing jeopardy. Report issued on Tuesday, American Statistical Association concludes that government statistics are reliable right now. Well, that's not a good report. But that could soon change, a study warned, citing factors including shrinking budgets, failing survey response rates, and potential for political interference. No, you think? So anyway, link into statistical systems of physical infrastructure like highways, bridges, vital, but often ignored until something goes wrong. Yeah, well, if you look at the jobs numbers, these would be considered negative, but that's ignored too. So we do identify this sort of downward spiral as a threat, and that's what we're trying to counter. We're not there yet, but if we don't do something, that threat could become reality and in not too distant future. So this report, Nations Data at Risk, highlights the threats facing statistics produced across the federal government, including data on education, health, crime, and demographic trends. Yeah, I mean, yeah. But risk to economic data are particularly notable because of the attention received from policymakers and investors. Most of that data is based on surveys of household and business, and response rates to government surveys have plummeted in the recent year as they have for private polls. Yeah, of course, no one trusts the system. So yeah, they're not responding. Response rate to the current population survey, the monthly survey, 660,000 households, is the basis for unemployment rate and other labor force statistics. Has fallen about 70% in recent months from nearly 90% a year ago. So yeah, slow moving train wreck. Yeah, I love that. Problem could be facing with rising costs, conduct surveys, and a budget that isn't keeping up. Oh my gosh, they need more money. So yeah, there it is. This is the whole thing about how the reliability. I mean, it's also political interference, but anyway, that's all I have to say. And yeah, it's just like if you look at gold, uh, my target. And the reason why is if you've been following this video, I've been done numerous articles about how companies are doing poorly, businesses are doing poorly. There's a real estate bubble, a commercial real estate, credit card debt bubble, auto loan bubble. I pointed out a lot of the problems. So if you haven't listened, just go back to my videos, just listen. And if you look at it, gold 43.80, 60, and as I said, this it looks like it's going to still going up because they're going to cut rates. What's also bullish is there's going to be poor economic data, and they're going to cut rates. Inflation numbers in the next couple of months are going to start perking back up because they've subsidized consumption, and that's going to drive artificial demand and boost prices. So anyway, so I say gold's gonna go up, and then they'll probably have to raise rates again. Once they cut them, they'll probably have to raise them again. So it's gonna be insane. That's all I have for today. Just remember, I'm not a financial advisor, and so nothing can be construed as financial advice. Just my opinion on what's going on. And hit that like button, subscribe if you haven't, and I will see you next video.